Benoit Anne as well joins in to talk about global markets. He's the head of emerging market strategy at Société Générale. Benoit, hi, morning. Firstly, how has your emerging market strategy changed over the last 3 months, and are you seeing more optimism towards EMs, versus DMs?
Well, I'm now quite bullish on emerging markets. My whole story for 2014 for EM was doom and bloom. So doom and bloom, not doom and gloom. We went through a doom phase earlier this year, basically January, but at the time I said this doom phase was going to be short-lived, and indeed since March we've been bullish on EM. So that's been the bloom phase now, and clearly after the ECB policy action this week, I'm extremely bullish on global emerging markets.
Benoit, are you seeing more money coming into India within emerging markets? And could you give us some sense of the kind of money that is on its way, which could come back from your India dedicated funds?
We've seen considerable inflows back into India. There was a clear appetite on the part of investors to position ahead of the election. I must say, maybe going forward the potential for further inflows is now somewhat diminished now that the election has taken place, but clearly the environment remains positive for India's or flows into India. It's just that most of the inflows already took place.
Benoit, India has already run up a good 19% year to date, one of the best performing markets in 2014 within the emerging market pack. Is there scope for more upside, you think?
Yes, I'm quite positive on the appetite backdrop for global emerging markets. It's only the first wave that we've seen, and there's much more to go. One of the big game changers has been this ECB policy response that we've seen this week, a massive boost to risk sentiment towards EM. So I'm going to be quite positive on all those markets that offer cheap valuations and high yields. India is actually one of them.
Well, Benoit, India for long has faced on issue of perception management, and has perception about India changed?
It has clearly improved. First of all, we had a positive outcome for the election, clearly a strong signal for international perception here. Now it's, I guess, an expectations game. The bar has been set high, and new authorities will have to deliver.
Benoit, what's your call on the currency then? The RBI in the recent policy stance sounded dovish and somewhat normalized the business environment for export sector by reducing the credit refinance window. It signals the ease, the central bank has on the stability of the rupee right now. What's your own view?
Well, I'm overall, I want to keep a bullish bias towards the rupee and Indian assets overall, but I would also point out there are opposing forces at play right now. It's true that the central bank, the RBI, is going to be leaning against the wind. They want to limit excessive appreciation of the currency, and in fact they are buying dollars to contain the strength of the rupee right now. That limits the upside for the rupee, and I'm only going to be moderately bullish at this point, not super bullish on the currency.
So, what are the recent fund flow trends suggesting about emerging markets? Where is the upside?
Well, we've seen a massive turnaround since February. Investors are back into emerging markets, both equities and fixed income, and it's scaling up month after month. The last data I saw for the month of May showed a pretty uptick in flows back into EM. That is going to continue because the environment is very positive. EM assets are cheap, positioning remains very light. Overall, the technical position is very favorable, so there are reasons to believe inflows will continue to be quite strong into EM.
How are you looking at Ukraine, Russia and China, and are they seen as risks to your emerging market strategy?
Only a tail risk here. To me, this Ukraine crisis is no longer a crisis for global markets. It's a geopolitical, localized crisis, but even on that front, we're seeing tangible progress. So this is only a tail risk and not a major event for me anymore. China, I would say almost the same story here. The slowdown in China is now well priced in, and I'm not going to worry about that too much anymore.